Yes, guys, so welcome to the next video of the series. So right now we're just going to be looking at risk on versus risk off markets. This is probably a term that many of you have heard, and really and truly, it's an easy way to break down how we see fundamentals across the world. It's not something that maybe you might consider on a day-to-day basis, but just understanding what the macro fundamentals are and are we risk off or risk off. So as I said, it refers to changes in investment activity in response to global economic patterns. It makes a simple approach to the marketplace because it really and truly breaks down fundamentals in a simple and dissected plan. So you've got to understand two things. When you're in risk on situations, investors have a high risk appetite and bid up the prices of assets in the market. So when we talk about assets, which type of assets? Assets that are a lot more risky, that require a lot more productivity, a lot more economic activity as well, for example. So this might mean stocks go up at the time, more recently crypto, for example, as well. Then when we've got risk off is when investors really want to lay back and sell the assets that they can that are very risky, but hold on to assets that will keep them sort of in a safe haven. So you've got different types of safe haven currencies, types of commodities that people hold on to, types of treasuries that we also talked about as well. But this is obviously something that we're going to look at in more depth soon as well. Now, to simply break it down, let's look at causes, best investments, characteristics, and then some safe haven currencies. So when you're risk on, what does that mean? A booming economy where risky assets are rising. The best investments at the time, a booming economy where risky I just put the same thing. But essentially what I was meant to say was best investments could be the stocks, could be the cryptos, could be what other type of assets have we got? Something that's a lot more risky. So it wouldn't be bonds essentially. Some types of currencies as well, people would hold on to them, especially when their markets are moving well. So obviously different type of investments that we can look at, and the characteristics, high yields, much higher return on investments. And this is what they want at the time. When the economy is booming, large investors, they want to see that return on investment, because if the economy is booming and they're only receiving maybe that 1% interest that they're leaving in the bank, for example, there's not going to be much incentive to keep it there, right? If they're able to earn 20% a year on the stock market, then they would much rather do that. However, when we turn risk off, there's economic downturn and geopolitical issues. More recently, what we've seen is with coronavirus, something that hasn't happened in many, many years, a complete pandemic. So what are the best investments at that time? As I said, treasury bonds, gold, cash as well, and then other safe havens. Because especially at that time, you've got to think about interest rates and what happens there. So if you're holding on to cash as well, yes, you might gain some interest rate on your saving, especially essentially in your bank account. Characteristics: low yielding assets that look to preserve capital, acting as a hedge. And that's the most important thing that I'm going to explain to you here. They look for something that acts as a hedge against inflation. I previously explained this before, but just to go over it again, if there's more inflation occurring, for example, you're obviously going to try and hedge against that, right? So when you're risk off, you want to preserve that capital as much as possible and keep your money safe. Usually, some safe haven currencies, JPY, CHF, and the US dollar. The reason for that is because they're usually very sort of stable, especially the way in which their central banks go about things. However, this has changed slightly recently, especially with JPY in the past 2 years, I would say, because of the way, the pandemic hit them over there. So more recently in the past few years, there's been some differentiating factors, but generally you see JPY, CHF, and USD as the safe haven currencies. Anyways, guys, I hope you enjoyed this lesson and understood everything. All right, take care, and I'll see you in the next lesson.